Welcome to the meeting of the Corporate Governance and Audit Committee. My name is Councillor John Taylor. I'll start by asking members of the committee to introduce themselves. I could start.
Oh, stick this thing on. Councillor Cathpan.
Councillor Imran Safdar.
Chris Jones, independent member.
Councillor James Homewood.
Councillor Caroline Holt.
Councillor Angela Sewell.
Thank you, committee. I'll ask officers to introduce themselves as and when they speak. Do we have any apologies?
Apologies from Councillor Bill Armour.
Okay, thank you. Minutes of the previous meeting held on the 27th of September. Are members content with the minutes? Yes? Okay, so we accept those minutes. Thank you. Declarations of interest. Do members have any declarations to declare? Okay, thank you. If you do decide during the meeting you do have a declaration, if you could fill in the form and hand it to the clerk at the end of the meeting. Thank you. Admission of the public.
This is a public meeting.
Okay, thank you. Have we had any deputations or petitions?
None received, Chair.
Public questions?
None received, Chair.
Okay. Right, we're making rapid progress. We'll move on to agenda item 8. And I think Sam's going to introduce this one for us.
Yes, hi, my name's Samantha Lawton. I'm the Service Director for Legal, Governance and Commissioning. And this report is a report which is a noting report. It's for members to note that we have appointed an additional independent person. So an independent person is a person who provides me with advice when I receive complaints about councillors. And I'm entitled to contact the person and share the complaint with them and get their advice about how we proceed and next steps. For a number of years, we've only had one. I do have a delegation, which I've referred to in the report, to be able to appoint another one. We should have two, and now we do. He's quite experienced, and he does work as an independent person at other boroughs as well. So I just wanted to share that with you, and if you have any questions, please let me know.
Thanks, Sam. I'll open it to the... Kath?
It doesn't say whether or not Mr Ainsworth is a Kirklees resident.
He's not a Kirklees resident. There isn't a requirement to be resident in the borough of which you're an independent person.
No, that's perhaps we should have. I mean, you can look at it two ways, can't you? But I think that being on a committee of Kirklees Council, you would want somebody from a Kirklees resident. I'm
not necessarily sure I agree. I think the great thing about when you're not part of a Kirklees borough is that you are truly independent in terms of you don't understand or you haven't heard about what some of the issues may be, and all we will have to go on is the facts of the complaint from speaking to them. So it's not a requirement in law anywhere, Councillor Pinnock. And I think one of the difficulties that we've had when we have tried, because we have done that in the past, is my understanding, but we haven't been successful in recruiting an independent, hence that we haven't had one for a little while.
I suppose it will mean that we have the new independent person will not necessarily understand the context in which decisions are made, and we have to take that into account.
Well, yes, they're not making any decisions as such, but they will be. They do attend standards committee.
They ought to be influencing decisions, otherwise there's no point to having them.
The independent person?
Mm-hmm.
Yeah, well, I take account of their advice. They provide me with advice. I do consult them. And sometimes the context of what has happened in Kirklees will need to be explained. But we have, and if it's something that's happened at a council meeting, they'll be able to watch the webcast. I often share footage with them of what's gone on, reports, anything they need to consider they will have access to. They also attend the standards committee that we have. So when we're looking at complaints and we're looking at themes and trends and so on, and obviously they're there with the other members and they hear the comments from members about what the culture or what their context of Kirklees might be. But we have 2 standards committees a year and they do attend that as well. So from my point of view, they feel quite well informed, although there are times when I do have to provide them with additional information.
Okay.
Okay.
Did any other members wish to comment?
Just reiterating the point of Councillor Pinnock. Okay, so obviously we sympathise that it's difficult, challenging to sometimes recruit someone professional enough within the borough. But would the independent person, who I assume is very intelligent and articulate, would that person be given a briefing into the socio-economic, housing, education picture around Huddersfield, Dewsbury Batley, all of Kirklees? Are they given a bit of a crash course into the lay of the land, so to speak?
We haven't got something of a formal nature, I would say. We have sat down, we have met, we've talked about it, we've discussed, and I could provide more information. Through the application process, they'd obviously done their research around Kirklees through some of the questions that were asked, and I could see that they'd obviously, you know, they knew the makeup of the council, they knew the history, they'd looked on and saw that we'd had the Democracy Commission, they'd seen lots of things that we'd done as an authority. So they had done their research in that context. I think the fact that I contact them fairly frequently, unfortunately, means they're quite probably well aware of anything that may come up or the issues or what's going on. So the longer they are an independent, the more experience they gain of the authority is what I would say.
Thank you. James?
Yeah, can I just clarify, because I think maybe this is a bit of a, I mean, I could be the one that's wrong here, so let me just...
Okay.
But I think there's a misunderstanding about what the role is, because to me, the independent person is there just to deal with to support the complaints process, is that right?
That's right.
Yeah, so I'm not sure what they know about I mean, obviously you want to know where you are, but my interpretation is I've chaired the Standards Committee once and looked at a complaint. I don't think it made any difference whether the person was from, where the person was from. The point was they were looking at our standards regime plus the, you know, the
behaviour and the conduct of that member.
Yeah, and the person's human rights and all this sorts of stuff. I don't think the fact whether they lived slightly outside the borough was actually that relevant. So I think to me the more important thing is having the person who has the right skills to do the role. So I wouldn't be too concerned about that, to be honest.
Okay.
Thanks, James.
No, I mean, I wouldn't disagree with you, Councillor Homewood. They are concerned with the facts of whatever we investigate. So it is about the behaviour, the conduct, the details of that complaint. As part of that, you might look at what has happened at that meeting or what the issues are, but it would all be considered and they would have that information when they give me advice. Okay.
Thanks, Sam.
Okay. Okay, thank you.
I'm going to move on to agenda item 8. I think, Sarah, you're going to present this one for us, are you?
Hi, good afternoon all, thank you. My name's Sarah Brown, I'm the Head of Welfare and Exchequer, and I'm presenting the annual report on bad debt write-offs today for 23-24. So this report summarises the debts written off for the financial year 23-24 and is here for information and, of course, questions and comments. I'm going to briefly sum up the key points and then open for those questions. So we know that the Council has a good record of collecting income and we have a range of supportive measures to help bill payers who may be struggling as part of a broader suite of income collection and recovery measures that ensure that everybody who can and should pay pays. We've got bad debt provision built into budgets, as we know that all debts will not be collected over the fullness of time, no matter how good our provision is. And the bad debt provision varies across services and is regularly assessed by our finance teams to ensure that the Council is not exposed to significant write-off pressure in any one year. Last year, it's fair to say, was a challenging one due to the continually national pressures that are impacting our residents. But the debt written off in 23-24 reduced slightly in comparison to the previous year. And we believe that was in part due to the build-up of debts due to the pandemic. The paper that I've submitted focuses on our top 5 write-off areas, with all those areas focusing on ensuring that wherever possible, direct debit is the means by which income is collected. That, of course, ensures that good payment behaviour, which helps prevent debt accruing. All areas also follow debt recovery processes, which start with nudges and trying to prompt payment that way, and can continue to court action, enforcement officers, charging orders and alike. Legislation does mean that for areas such as adult social care, services cannot be stopped, and recovery methods, it's fair to say, are slightly less robust than in other areas like council tax because of the legislation we follow. We are, of course, as a service, always reviewing our advice set up for debt advice to ensure that all our residents are getting what they're entitled to by means of benefits, support in those early debt recovery processes. And all departments are conscious of maximising residents' income and ensuring that that good quality debt advice really helps our residents longer term. So when we look at the summary of the reasons why debt is written off, the majority is due to it not being viable to pursue. And by that we mean it's uneconomical to take further action, either because the debt is simply smaller than the costs it would take to recover it, or activities that we've taken so far have been exhausted, and the debtor, the resident in this respect, would simply have no means by which to make payment. We do have an aged debt project live at the moment, which is looking at moving services wherever possible to payment at point of order, starting with the trial in our town halls where we are today. And this kind of activity is really intended to help to prevent debt building up in the first place, so we're not at write-off ultimately. Clearly, it's not going to solve all debt accrual, but it will help to reduce those issues, particularly with those smaller debts we hope to see as time goes on, and allow us to redirect debt recovery to those bigger ones that can't be resolved by payment at point of order. All departments are really proactive at looking at recovering debts, and it's important to note we'll always write on a debt back onto the books where we believe that this new information's come to light and we can actually now recover that debt. So for the purposes of this meeting, we've summarised it, the debt in the top 5 areas. I've added a couple of additional tables and data sets following some feedback last year, so hopefully they're helpful. So, for example, with council tax and business rates, I've included the fullness in time income targeting data so that you can see where we're aiming to achieve ultimately with our collection figures. And I've also added some benchmarking data comparing us to other LAs for council tax. So in terms of the highlights for council tax write-offs, we have seen an increase in this financial year, and that's largely because as a department there's been catch-up work post-pandemic. Important to note though that robust write-off enables us to really focus on that debt that we have opportunity to recover. Business rates write-offs have decreased slightly, and we do see those variances year on year, depending on just variances within accounts and debts that have accrued. It's fair to note that the adult social care debt is relatively low. I have asked that the team ensure that we've got some benchmarking detail for this next year for you guys to see the comparison. It is a small team. All debt write-offs are reviewed by the adult senior leadership team to ensure that all that has been done that can be has been done. The debt in this area is it takes longer to achieve than other areas, and that's because we're obviously dealing with deferred payments, the court of protection where deputyships and appointeeships are being put in place, and of course disputes with family members. But we are that our area at CFA that collects that data is sat well and truly within the Adult and Health Programme Board that many of you or all of you will be familiar with. And we're regularly reporting back on the debt that we're recovering in that area and strategies to increase recovery, because we recognise that it's a growing older debt situation in that area. The housing benefit overpayments historically are always fairly high in write-off world. We do receive 100% subsidy from the government on housing benefit write-offs where we don't go over the threshold for LA error. So largely in this world, anything where we recover an overpayment is a bonus to Kirklees. So we are putting a lot of energies into that in this next financial year because of the changes in universal credit. It's one of the hardest debt areas to recover just because of the cohort of residents that are in receipt of housing benefit. But we do have some success with that. And then finally, we've got homes and neighbourhoods where, of course, accruing debt can eventually lead to eviction, and we did have 31 of those last year. There's a robust income management team that sits within homes and neighbourhoods, and they do ensure, that as much debt is recovered as possible. They have, it's really important to them they set up those good early relationships with their customers. They do have 46% of their tenanted properties on direct debit, which is, I'm told, very good. And I've asked them to provide some comparative data with other LAs for next year's report, because I think, again, that's really helpful for us to understand where we sit in that benchmarking area. So that's a whistle-stop tour, and I'll open for any questions or comments.
Committee? James?
Yeah, thanks. Just a couple of things. So, I mean, obviously looking at the figures overall, I mean, it doesn't seem like a bad position, albeit there's been a bit of a downward trend on some things. I just wanted to clarify a couple of things. When you say the team had high workloads due to the fallout post the pandemic, what does that mean? What fallout are we talking about?
So Welfare and Exchequer were responsible for an awful lot of the work that went on in the pandemic in terms of things like the Household Support Fund and all the grants that went out. So, and you'll forgive me, I wasn't part of Welfare and Exchequer during this period, but they did deal with things like the £150 energy payment that went out and things like that. So they were pulled rather off the day job to undertake lots of activity through that period. And of course, it was a difficult period in terms of those debt relationships and having people going out and having those conversations with people. So it was a difficult time for debt recovery, it's fair to say.
Which is fine. I just think that maybe it's a terminology thing, but I wouldn't say that's a fallout post-pandemic. I would say that was a strategic decision about how we resourced the organisation and what... Do you see what I mean? Because it's just sometimes, it's not necessarily in this report, I think COVID is a catch-all, gives you a catch-all excuse for any sort of thing that doesn't look quite right. Well, it must be something to do with COVID, so I think it would just be good. I think we should just be really clear about it, and it makes sense why that is. The other thing I just wanted to ask about was, the housing benefit overpayment, and this might not be your area, so probably it's not, but what is the reason why people are overpaid? Is it the individual's error, or is it the government's error, or our error?
It can be a bit of a mixture if there's been delays on cases in terms of processing, but primarily it'll be around incomes not being declared, so it might be changes to private pensions or things like that. We do have access to an awful lot of data from DWP, but there are things that fall through the cracks, and of course there is always areas like fraud, and simply people not declaring that people have moved into the households and that they've had changes. So the team is really quite dogmatic in terms of their approach towards that, but there will always be areas where overpayments are created just because we simply haven't been told about something, or something on the rare occasion has gone wrong.
That's fine. I was just thinking around the ethical element of some of it. So, as you said, we get funds back, and then makes sense we should chase that money, particularly if somebody has not been transparent about their situation. But if someone genuinely has done nothing themselves incorrectly, has been overpaid, I mean, I know this isn't the only place this exists, it always just gives me a bit of an ethical concern that we then go and chase somebody who probably, you know, is probably at the lower end of the income spectrum as it is, to try and chase them for monies that actually we've already recovered in another way.
I'm going to bring Chris in next and then Gareth. Chris first.
Okay. Firstly, Sarah, thanks for the report. It's an interesting read. And it's really good to hear the initiative around kind of payment in advance. I think that's obviously avoiding debt is always better than trying to collect it afterwards. So that's a good thing to be doing. I'm not sure, obviously some of the debt write-offs look quite low. I think it's quite hard to contextualise that without understanding a bit more about what debt's outstanding at the end of the year and what the age profile is. I'm not asking for more information, but just having a percentage of the debit leaves me a bit unsure as to whether that's appropriate or not. I guess if we took the adult social care, I'm just making up figures, if you had £10 million outstanding at the end of the year, of which 5 million was more than 3 years old, writing off 0.38% might not look right in that context, but it's a bit hard to tell from this. So I don't know if you've got that information. Maybe next year you could expand the columns a bit so there's a bit richer. And my other question was really, how do we become more like Stockport? Because just on simple data, they collect more in the year and they're writing off less, I guess, as a consequence of that. So I don't know, where do we look for ideas as to how to improve in-year collection? Because again, in-year collection is the way to avoid write-offs, isn't it?
Yes, certainly for council tax, we're always having active conversations with our neighbouring authorities to really understand what good practice they've got in place and to steal their good ideas, absolutely. So, no, we do and are having those regular conversations. Yeah.
So is there anything they're doing, is there anything particular? It's obviously you share data, you get asked questions. Are there tricks that other councils seem to be doing that we aren't doing? Because I guess if you collected the same percentage of Stockport, that would be an extra £4 million, nearly £5 million in each year. So what is it do you think others are doing that we aren't? I mean, obviously we're in the top quartile of this league table anyway, which is great. But
yeah. In all honesty, there's not an awful lot that other local authorities are doing that we aren't doing. We are actively engaging with new and upcoming technology. So we're looking at bringing in something in the coming months where we are engaging with customers in that nudge way differently, really early on in the process before we get to the point at which we're taking particularly council taxpayers to court. So that's something new we're trying next year. Neighbouring authorities like Bradford have had real success with that kind of technology. So we are actively engaging and listening and trying to bring stuff in because we want to push that collection target up as well.
Thanks, Chair. I was just going to build on a conversation between Councillor Homewood and Sarah earlier around the debate between, are these errors claimant error or local authority error? And that's one of the things that I suppose the Royal We, Grant Thornton, do look at in the annual housing benefit audit or certification process, because they attract different levels of subsidy depending on which type of error they're allocated to. So, I mean, it's not Greg and I personally, we've got a separate grants team that run our grants audit, but that will be a thing that they look at to say that the things have been allocated correctly in order that essentially the council can reclaim appropriately on that as part of their subsidy. So it is subject to an audit assurance process. Thank you, Chair.
Okay.
I don't think I'm going to be as sanguine as the previous two committee members. We've got a cash-strapped council and we're writing off £5 million of debt. I can think of a few things that might help with that £5 million. I accept that some debt is always going to be written off in adult social care, housing benefit, those sort of areas. I understand that. The areas that I am concerned about, because of although the percentages appear low, the total of the debt is, in a council that is scraping around for every odd halfpenny down the back of the sofa is too high. Council tax, Chris has said about the comparison with Stockport. Now, our council profile is very similar to that, and demographics very similar to that of Stockport. So we are clearly missing a trick in being able to improve our council tax collection. One of the concerns I had when I'm reading the report, that says, I think perhaps you raised it, the debt recovery process has been challenging with staff shortages. Well, if you're trying to collect as much money as you can in, you put an effort into employing staff to even on a temporary basis to do that work, because it's money that's lost to the council once it's written off. So the two areas to me are council tax and business rates write-off, which I say I consider that to be far too high. And, we can't keep using COVID as an excuse. So when you looked at the tables, we were collecting 98.78%, 7 years ago. And now we've dropped down 2% or more. And that equates to a considerable sum of money. So whenever I'm hearing, we can't do this, we can't do that, no youth provision in my neck of the woods, do you know that 2 million would come in right handy, for example? So I am quite concerned about what this report tells us. For those reasons, just to give an example of what I think goes on globally. So I'm on a charity, I chair it, which pays people's water bills when they're in difficulty. And we had they have to show that they're in water debt and another priority debt, which is council tax, utilities, etc. And it's always the council tax debt that's the highest priority debt, because people think there's no recourse really for councils, and that concerns me. So I leave that there. So if you've got gas or electric, you're going to get turned off. If you council tax or rent, you could be evicted. That's why those are lower on these lists I get from all the thousands of people who apply, but not council tax. And that tells me perhaps we're not as robust as we should be. I will repeat, I know there will be some people who won't be able to pay. I understand that. And there will always be a level of bad debt write-off. I understand that. I'm just saying I think it's too high. And that we ought to be doing more early intervention, probably. I think that's basically what you were saying, to get on top of it. Now then, the other thing that really frustrates me, looking at the tables of services who've got debts, some of them, again, it's going to be understandable. So I'm not going to go into children's families or anything like that. Highways and street scene. Why on earth should they let off somebody 70,000?
I'm afraid I'm not in a position
No,
to...
that was a hanging question. I'm not expecting you to answer it. Why though? That means we're not getting stuff from people, money from people that if it's highways and street scene, it'll be tarmac and hard stuff that that we'd be able to should be able to collect. And £70,000 would go a long way in my ward, getting perhaps some of the pavements repaired that are in desperate need. For example, that's why I'm getting angry about it. I don't know why we've lost 125,000 in governance and commissioning. I'm not sure what oh, sorry, beg your pardon, in finance. I'm not sure what that's about. However, so I suppose my point is, Chair, I think we ought to be pursuing, asking those who are collecting debts to do more, to get the money in earlier so they don't stack up and then you can't get it. And particularly when we're short of money.
Thank you. James, you were next.
Yeah, I was just going to two things just on that. I mean, I don't disagree that we could, presumably the collection rate has gone on the council tax and others has gone down, so there must be ways to get it up, and obviously intervention would be good. I suppose the only thing is, I'm not sure it's the right thing to say, well, there was 5 million there, because obviously we've talked about the fact of how much does it actually cost to collect that money. So actually, you could spend 10 million collecting 5 million, couldn't you? And then you would have 100%, but you wouldn't have been value for money. So there's a point somewhere, isn't there, at these extremities of, 1%, 2%, 3%, 4%. Where do you draw? What is delivered? What should be recovered and what shouldn't? The other thing I just wanted to check, a bit random, might be totally off the rails here, but in terms of like the differences between us and does having students make a difference here? Just because I've had an example in my family someone who was a student, not in Kirklees, but was being chased for council tax debt, and they're saying to me, well, I was a student, and they just hadn't registered it properly. And I just wondered if that happens at all, because obviously some of the places that look left low on the list seem to be big student areas, and I wondered if that had any impact, because obviously you don't necessarily know whether somebody's a student unless they actually properly register on the council for council tax, and I wonder if sometimes we end up chasing those people.
We put quite a lot of energy into working with particularly the bigger landlords to ensure that we've got accurate student lists, because obviously when students aren't in properties, there's council tax to pay. So we do put quite a lot of energy into that. But as you've said, it is a balance between ensuring we put the right amount of energy in and get the right result out and the right amount of money. Yeah.
Okay.
Yeah, I mean, I was just making the point that if you've got students, they might not register properly. That might mean you chase money that then you can't get back, because they then provide evidence to show they were a student, and obviously it's more transient, so people go, then you can't find them again. So that's the only point I was making, that might be the reason why, places that, to me, it looks like places, less student places, that are doing better on that list, but that might just be, might not be relevant. But
Thanks, James. Chris?
I suppose I just wanted to put my sanguine nature in context, because I'm not normally like that. But if you look at the write-off summary, the big tab we're looking at, Cass, so the debit has gone up 10% over the year. Yeah. So the amount invoiced has gone up 10%. The amount written off is broadly the same. So I think, A, it's clear the council's trying to generate more income through some of these things, and B, it feels like in total collection is stronger, which doesn't necessarily come through in the narrative, but I suppose that's one of the things that made me feel assured. I accept that writing off £5 million is always difficult, but I think that's £5 million over a number of years, isn't it, really? And therefore it's not just badged against the debit for the current year. So I think it feels to me like good work's being done, but I guess it's just getting harder and harder, and as we charge for more and more services, it's going to get harder and harder still.
Thanks, Chris. Kevin?
Thank you, Councillor. Can I just clarify a couple of points that Councillor Pinnock raised? In terms of the reference in, I think it's paragraph 2.9 in the table, where we were collecting 98.3 and then just short of 98% of debt, that's in the fullness of time. So we will continue to collect debt from those years. So those percentages will gradually creep up. And the in-year percentage this year, where we're at probably 95 and a bit, that will creep up towards 98 over time. So the two figures are not strictly comparable, the in-year and trying to look back at a 2021 cumulative figure, because they will, the in-year will creep up to that level. And just the second point around, you raised around the other areas where residents may have debt and you quoted energy, for example, and rent. I think unfortunately there is a hierarchy of priority when it comes to recovering debt, particularly when people are on UC, for example, and the council tax is lower down the list than energy. So that does have an impact. But we do obviously take people to court for non-payment of council tax. We collect probably between £1.5 million a year from non-payments of council tax. So we do try every avenue available to us to recover that debt. Thank you.
Thank you. There was a couple of points I wanted to make as well. No, it's fine, Kevin. I was going to say that there are a number of comments in here. So in 2.8 it talks about there's a backlog of people we need to pursue through the courts. I think James picked up earlier about, or somebody picked up earlier about in 2.4 about staff shortages. And then in 2.9 it talks about tightening processes and procedures to maximise recovery. It feels to me as though there is something in there about we're probably not optimised at the moment, and really it's one for Kevin, I guess, to take away and look at is this report is suggesting that if they had more resources, they'd be able to achieve more. That needs to be balanced against the cost of bringing in those additional resources. That's what I mean about it doesn't feel as though perhaps it's optimised at the moment. But certainly that, if you step back and read the report, that's what comes through in the report. So it's probably just an observation to take away and perhaps give some consideration to, particularly as we're looking forward into the new year and budgets, whether perhaps we have got that resourcing right in that area. But other than that, and I don't ask you necessarily to respond, Kevin, that's just one to take away and think about. So, members, are there any more questions that anybody wants to ask? So we are asked to note this report, I think. Yeah. Is the committee content with noting it? Thank you. Thank you, Sarah. Thank you, Kevin. The half-yearly monitoring report on Treasury Management. I think James are you doing this one, James? Online?
Hi, Councillor. Thank you. Yes, I'm James Anderson, the Head of Accountancy, and I'm just picking up this, it's a regular annual report we do on the Treasury activity for the last 6 months. So I'll just whiz through the key points and then open it up for questions, if that's okay. So the report confirms that the Council has operated within the strategy that we approved, our Council approved in March this year, and the report gives assurance that the Treasury function is being managed prudently and proactively, and that the Council complied with its Treasury management prudential indicators throughout its first 6 months. Those indicators are shown in Appendix 4. In terms of the investments, we have a total of 51.6 million on average held in investments. Just to flag that that's slightly higher than normal as a reflection of our borrowing strategy that suggested that we remove some of the elements of interest rate risk by taking regular but smaller amounts of borrowing throughout the period. So that might mean it doesn't necessarily match up with cash flows. So we will sort of have a higher balance. But on the flip side of that, we are taking advantage of dips in the borrowing rates when they occur as part of that overall borrowing strategy. So in general, the Council's average interest rate on investments was 5.06%, which is obviously quite a high level. We then have a little bit of a narrative from Arlingflows, our Treasury advisors, and they just provide a commentary on the wider economy, really, for the period up to September. It'll cover things like the inflation rate, the Bank of England base rate, and estimates on UK growth, and finally sort of some projections onto in terms of the base rate between now and the kind of the end of 2025 really. In terms of borrowing activity, external borrowing has increased by nearly 41 million to 748.2 million at the end of September. We have taken 55 million of medium and long-term loans during the period, but we've also repaid 22.6 million equally of medium and long-term loans. So whenever, that's really a reflection of the fact that when we take out borrowing, we look to ensure that nothing's maturing, or not too many things are maturing at the same time. So we look to even out those maturities over a 50-year period, and we do that in conjunction with the Treasury advisors. So when we take out a loan, we'll look at how much we want to borrow and the duration and the rate, and we'll try and find a sweet spot of all those things. Just to note as well that gilt yields were pretty volatile over the 6-month period, but have reduced slightly between April and September. However, following the budget in October, there's been a further increase and equally a bit more volatility over that period too. Just probably as a bit of an example, the 10-year certainty rate for PWLB at the end of September was 4.79%, as just an example. And that's pretty much it from me. I'll open it up to questions if that's okay. Thank you.
Thanks, James. I'll open it up to the committee. Councillor Pinnock.
Thanks very much, James. This is a sort of basic report about where we are and what we're doing, but from a Treasury point of view. But there was one sentence that I was going to query if I can find it. On 262, where it says that the council has not invested in assets primarily for financial return, which is a really good policy to have, considering what's happened with other local authorities and their rather reckless, in my view, decisions to invest in property. However, the George Hotel rather fits that example, doesn't it? It's investing it for a financial return. Well, let's put it like this. That's what I was told in another meeting by the Cabinet member.
Well, I suppose from a strictly Treasury perspective, we have to abide by the Prudential Code, and there'll be a variety of sort of the statutes and the rules that we pick up and we abide by as part of that. When we do that, we have to look at what things we have in the capital plan, for instance, of which the George Hotel is one, and we have to make a distinction on these, and we'll look at what's the rationale for us investing that money or putting that in the capital plan. In that case, it met the conditions of regen as being the primary motive for that borrowing. So when we came to put the plan in place and make the borrowing, there will be a little note you have to tick on the PWLB application form where Section 151 will have to confirm that the primary reason for that investment or that borrowing is not for investment in a commercial sense. So the George in particular it's a regen project in that criteria sense.
Well, there you go then. Hotels are regen projects.
Have you any further comments, or can I bring James in? James?
Well, I was only going to say that on the, I think James explained it. To me, there's a difference between something can be a regeneration project which has which can drive some income, which helps you understand how much you can borrow in order to make that viable for the financially sensible and viable, as opposed to something that you might invest in that might have no return whatsoever, and that has to be obviously considered in terms of how much you can borrow and what the revenue impacts and stuff would be on that. I think that's the difference. It's clearly a regeneration project, isn't it?
Can I just come back on that? Because, we've had the local authorities across the country have made investments in commercial properties that have then failed. And this is an investment in a commercial property, and we have no surety that it won't follow the route that other investments have made in commercial property. And that's why I've queried that sentence in here.
Councillor Pinnock, I think you made the point, but I think it's probably a broader point rather than Treasury management, and it's probably more a political...
No, the reason I'm asking, because the sentence
you've asked
is in
and
here.
you've had the response. What I mean is, I'd rather we focused on Treasury management rather than have which is a political debate about the rights and wrongs of the George Hotel.
It's not a political debate at all. I'm not interested in that. What I'm interested in is the approach that we're taking that's in here, which says has not invested in assets primarily for financial return. And yet I've been told in a separate meeting that that's what that is. So I just wanted clarity.
And I understood
I have
that,
not got clarity.
Well, you've had the answer. I'm not sure a debate between yourself and Councillor Homewood is really going to add to that. That's probably a matter that needs to be taken up elsewhere, rather than what we're talking about today is the report on Treasury management. I'll try and keep it to that if I can. I think Chris. I think it was Gareth first, and then Chris.
Thanks, Chair. I was just going to say, picking up Councillor Pinnock's point that at the next meeting you'll have the accounts ready for approval at the end of January. So within those accounts, there will be a balance for investment properties. Now, without getting too technical about accounting in this meeting, the council can only account for those assets as investment properties if they're held for capital appreciation and or rental income. So purely that commercial angle that was mentioned before. So there's quite a specific definition to be allowed to go into that category, and those are the ones where clearly around the country there's been a lot of issues, shall we say, in terms of councils getting into them. Whereas assets that are purchased as part of a council objective and a strategy, like for example the one we've been talking to, they can be accounted for in inverted commas normal land and buildings, which are valued on a slightly different basis. So this is an area that Greg and I and our team have been reviewing in quite some detail with Kevin and James and their team during the audit, to make sure that A, they're allocated to the right category, and then B, that they are valued on the appropriate basis, and C, whether there is any, I suppose, risks to a high proportion of assets being badged as investment properties, and that's more part of our value for money work, which again you will get that report at the end of next month as well. So there is, this is an area that auditors and finance colleagues do discuss, but are subject to quite distinct sort of accounting procedures and valuation bases. Thank you, Chair.
Thanks. That was quite helpful, actually. Chris.
Thanks, James, for the report and introduction. Two questions, really. One around the liability benchmark and the council's ongoing need for really significant borrowing, looking at the table on page 40. And so the question is, will the council be able to access the extra £400 million of loans, if that's what that table says we need over the next few years, and can it afford to service them? And then on the where's it gone? Stay with me. On the minimum revenue provision, thanks for the kind of statement of what's been going on. For those of us who don't live in a local authority world, it's still a really hard concept. So I was just interested in the kind of governance as to who makes the decision to change the basis of the MRP, and secondly, whether the new version of MRP is more or less prudent than the old one. And in answering that, perhaps you could tell me what prudent means in this context. It's not supposed to be a clever question, I just generally don't know. And if something's supposed to be prudent, it's changed, hasn't it? So.
Can I jump in on that? Thank you.
Yes, please.
Yeah, thanks for that, Chris. Good questions as always. So in terms of the liability benchmark and accessing loans, then yes, there's no issue around us accessing the borrowing, and the tables we produce are all around looking at what our borrowing requirement will be, so that we can kind of plan that treasury in over a really long period. We kind of have probably reporting 5-10 year periods, but ultimately we look at it over 25-50 year periods as well. So there's no issue with that, and the PWLB will always kind of support our borrowing in that sense. In terms of MRP then, and prudence, the really important thing is that understanding of prudence. And when we look at that, we'll look at various parts of the factoring, and it is a judgment call. There's probably not a great deal in terms of statute that was in force. It was literally just, so we have to take a call, and that'll include Rachel, the Treasury advisors, me, the Section 151, Isabel at the time, but Kevin now, and we have to satisfy ourselves that we're able to repay debt, and we are doing that through revenue each year. So it's really important to look at what the debt is, when the debt gets repaid, and what your assets are, because it's about the debts to fund assets, obviously capital side, and it's also looking at your assets and when those assets useful lives will run out, and equally when, because quite often when you take out a loan for an asset, that loan will not be at the same life, if you like, to an asset. So if you you're building a building or something, and it's got a 50-year life on it, it's unlikely that you'd necessarily have a 50-year loan attached to that. You might have a series of loans over varying lives, again, just to minimise interest rate risk, and equally not having a very large maturity at one point in time. So when we look at MRP, we have to look at taking a prudent view, and that is, I guess, it will evolve each year. It will look at statute, and within the sort of remits of that statute, it'll look at where we think the assets are and where we think the borrowing is, and applying a suitable rate so that we ensure that effectively you're paying an element of the capital back on those loans over the fullness of time. And in this particular case, that we got external advisors in to do that piece of work, who were separate to Arlene Close. So it was another set of I guess experts who come in, and we sort of have conversations with them based on their findings from that piece of work, and probably the appendix just picks up the highlights of that. But it is actually, once that piece of work's done, it kind of fell on finance colleagues. So Rachel and her team, me and Isabel or Kevin now would be having a conversation as to making sure that we're happy that it is prudent. But prudent as a concept for accountants is a slightly moving feast, but it's about our professional judgment onto the issue, and it can cover a number of things across accountancy, because not everything it's going to be cut and dry. There's a lot of estimation techniques, and it's about us us reflecting it prudently in the accounts. What I can say is that accountants normally are pretty prudent in the scheme of things. We don't tend to be risk takers by our nature. I hope that's answered everything.
James?
Well, speaking as one accountant to another, I've met lots who are very far from prudent, and I think we've just heard some examples of that in terms of what council transactions have taken place in other bits of the country. But anyway, just reassure me then that other options were considered, and tell me how you got to this solution.
Well, I suppose there are numerous ways to ensure that you effectively repay your capital, and some of that will effectively come down into looking at the weighted lives of the assets, which is what we've done in this case. And so you look at the asset lives, what's left, and you look at the rate as well. So you look at the borrowing rate, so it's the annuity rate that you'd normally look at to repay. And we went through the options and felt that we had the expert doing it, we challenged, and we ended up with this being a reasonable estimate of the most prudent rate available to us. And obviously external audit, so Gareth and Greg and their team come in, and they'll also check that they feel that we're being prudent as well. So that's probably our best way of relaying to you that is that external check on what we thought was reasonable.
Right, before I bring back in Chris, I'm going to bring Gareth in. You weren't aware, James, but Gareth was indicating he wants to comment as well.
Thanks, Chair, and thanks, James. So I think just before we get into this sort of specifics at Kirklees, I think this is a really important area for members to be comfortable with, because this is an area, again, at other places around the country where local authorities have got into financial difficulties through not providing enough MRP, essentially. I know you'll be fully aware of that, Chris. So, and James is absolutely right. There are varying shades of grey, I would say, in terms of how you calculate and deal with MRP. So obviously the review by the experts at Kirklees this year have proposed a particular methodology, which is essentially it's created an in-year benefit for 23-24, which has helped obviously the council's financial position, and it has, I suppose, in summary terms, pushed the higher charges of MRP back quite a period of time. Now, again, you can interpret that in different ways. You could say, well, that's pushing the problem down the road, and the next generation of Kirklees council taxpayers are going to really be, it could have some difficulties in terms of covering that. Equally, you could argue, well, with the time value of money, that payment does become less given, inflation, etc., etc. So it is an area of judgment, a bit like this conversation about investment properties and those being high risk nationally for local authorities. MRP is certainly a key area of focus for external auditors. So in both the ISA 260 report on your accounts and the auditor's annual report on your VFM arrangements, there will be reference in that report around sort of our review and work on MRP this year. Thanks, Chair.
Thanks, Gareth.
I mean, that's been a really interesting discussion. Thanks, Chris, for raising it. I mean, what worries me about it is that the purpose, the driver for reviewing the MRP was in order to release revenue. And you can only do that so many times, and then you are stuck. And so I guess what it highlights is whether the council has a very short-term view of its finances or tries to take a longer term. And the decisions here tell me it's very short term.
Was that a commentary, or were you asking anyone to comment on it? Okay.
I think if I may, Chair, I mean, what I would say is our predecessors as the audit team from Grant Thornton raised a key recommendation, significant weakness in our VFM report for 22-23 around, I suppose, the council's financial position as a whole. And you will see our report at the next committee. We've still got to meet with Kevin and colleagues to finalise that report, but there almost certainly will be a continuing commentary around the challenging financial nature, in common, to be fair, with a number of other metropolitan councils of where, you know, Kirklees currently sits.
Okay, thank you. I'm looking at the committee. Have we got any more comments we wish to make? Okay, so we're being asked to, I guess we're being asked to feedback any commentary that we wanted amending, but in practice this will now go forward to Cabinet and then ultimately to Council. So are we satisfied with, we've had the debate we wanted to have today? Well, thank you, and thank you, James and Gareth, for your contributions. I will move on to our final agenda item, which is the quarterly internal report that Simon's going to present. Just remind members, there's a bit of this that's on the yellow papers that is in private. We will deal with that after we've dealt with the rest of the report when we move into private session. But yeah, over to Simon, if that's all right.
Thank you very much, Chair. Members no doubt be disappointed. I'm not Martin Durnley, Head of Audit. I'm Simon Straker. I'm one of the two audit managers that reports to Martin. The report is our regular routine summary of internal audit work completed in the second quarter of this year from the plan that members approved earlier in the year. It also contains some information about counter-fraud activity. Perhaps starting from the various tables in part 2 on page 63 of the pack, to note that the opinion outcome from the positive audit opinions, which make up about 70% of the work that we do, has shifted from adequate to substantial to some extent, which is a positive. And then to note that really the rump of negative limited assurance opinions that we allocate is around 30% year on year. As to the completed audits themselves, you'll see that starting on page 64, that for this quarter we concluded with 3 limited assurance opinions. So I was just going to briefly run through why that was the case. So starting with, which is effectively personal care budgets, in this instance covering children with a disability. If you're not familiar with direct payments, they are made to parents or carers that have exercised the choice to receive payment in lieu of direct care from the council. And in the case of children, they totaled about 1.2 million, so it's about 150 caseload. This activity has transferred to Children's Services from Client Financial Affairs, which is a department in Welfare and Exchequer that Kevin oversees. That department has retained responsibility for the much larger part of adult payments, which are circa £30 million a year, and which we've also audited recently, and that's still at draft stage, so we'll be reporting that in quarter 3. So whilst changes are envisaged or in inception from Children's Management at the time of the audit, we found a number of things. So gaps in policy, the adults policy being applied to child cases and inconsistency with actual practice. So that led to a conclusion that the actual policy itself was not necessarily being effective. Monitoring systems hadn't yet been embedded in children's services, so that there were some large credit balances on accounts awaiting investigation. And there was generally a lack of coordination with care plans, so to some greater or lesser extent, a limited evidence of social workers taking finance into account when conducting care reassessment, so as to ensure that monies that are allocated and spent reflect the current needs of the child rather than necessarily historic ones. The second limited assurance area related to tenancy allocation in housing, so that's domestic housing. There are various ways properties are allocated to new tenants. The choice-based letting system to those on the waiting list, the arrangements seem to be working well, and we didn't generally have a problem with those. But outside of that automated system, we found evidence of limited controls, unrecorded use of management discretion, and some inefficiencies as described in the bullet points on page 66. I suppose the consequence of those things is that in some cases the council can't demonstrate why a property was allocated and that it went to the people with the biggest housing need. In others, there was evidence of that happening, yet non-compliance with policy on antisocial behaviour and or accumulated arrears. And thirdly, as the Chair mentioned, we audited 3 schools this year, and one of those returned a limited assurance opinion. I think we'll touch on that in the private session afterwards. Members may also be aware that we can effectively make quite a number of recommendations, both significant and merits attention in our terminology, from positive assurance opinions. So that's a substantial or an adequate opinion as described in our definitions on page 62 of the table there. So even whilst concluding with a positive opinion, effectively that the arrangements and controls are actually overall in a sound manner, it's perhaps worth just briefly digging in a little more depth in terms of what's worked well for those positive opinions, yet what issues still may arise from the audits. So there are a number of those. So briefly, on the accounts payable side, the overriding and continuing issue relates to a suspense account into which mismatches between orders, deliveries and payments are coded on the ledger system SAP. There has been improvement in terms of the value of what's sat in that account, so it's roughly halved since the last audit, but it still sits over £1 million. And structurally, the issue really is that service personnel need to make the adjustments and investigate why it went to suspense in the first place. And whilst finance colleagues and HD1 staff can support that process, they don't have the managerial responsibility to make sure it happens. And the length of elapsed time in some cases means that the original people that procured the items have left or moved on, thus making it increasingly hard to investigate and correct the changes. On a more positive level, bank mandate changes, which had been quite a substantial fraud risk in the past, seem to be better controlled and evidenced this time when we looked at it. Members may have noted the adequate audit opinion on your own compliance with the Code of Conduct and the Allowances Scheme. I should explain that this was effectively a joint audit in terms of governance, colleagues and IT management and administration, and the issues that we identified in the audit that meant it only got adequate were IT related, and there were no issues of impropriety or anything of that nature identified. So the IT issues related to asset recording and registration, controls over roaming charges, and the return of some equipment to enable reuse, which IT management are still resolving. Three other areas briefly that we looked at. We looked at the fire risk management arrangements, and whilst generally adequate, identified one or two issues, so that the school's policy needs completing. The fire risk assessment, checking, review and renewal process needs further work, and some of the maintenance work identified through the risk assessments was behind schedule, largely due to a key staff absence. We looked at foster agencies, where the couple of main issues related to the need to improve contract management and oversight, and to assess the value for money that the current framework contract provides. And on the prevent duty, further work is required in fully complying with the Home Office's recommended good practices. There are about a dozen of those, and some of the key ones still require a further finalisation. In section 5, I think it is, on fraud, on page 69, we describe some of the information on investigations ongoing and completed. We are increasingly conscious of the need to feedback and ensure that system control issues are acted upon largely by housing and welfare and exchequer colleagues. Probably fair to say that their own awareness has been raised and is being raised recently by the e-learning training programme that colleagues in counter fraud have developed and are rolling out across key parts of the council. And you'll also note that there were 2 money laundering incidents. I think that's also partly an awareness, a result of the awareness raising. So money laundering is seen for what it is, rather than just being just arising through administration errors or whatever. So the 2 cases mentioned were actually thwarted, and I think they related to requested large council tax refunds through stolen cards. So no money was repaid, but it's a case of being constantly alert, or staff being constantly alert to the eventuality of that arising. And I think, Chair, that's probably a not very long, not very short whistle tops tour through our recent work.
That's fine, Simon. I'll ask members if members have any questions or comments. Councillor Pinnock.
I mean, it just struck me actually. One of the what we might want to do as a committee is just pick out a detailed report of. Couldn't do them all, because there are too many, but. Just pick out what, for instance, prevent. We have a duty, a statutory duty in regards to prevent. Whether or not we ought to, at some point, just see the full report, just so we satisfy ourselves that we can say that I'm not suggesting there's anything wrong with it at all. It's not what I'm saying. but we have a duty to, that's not me, have a duty as councillors to be able to say that that report is okay. But we don't see it all. And say I'm not making any suggestion that there's anything wrong. I just think perhaps from time to time, those statutory ones, that we ought to actually just see the detail.
I understand that that is the practice in some authorities' audit committees to some greater or lesser extent. I suppose another approach would be to focus on the recommendations arising, and I know Martin's keen to bring a paper on a quarterly basis to reflect the implementation of things that have been agreed.
Yeah.
Which may give members further assurance that this is all well and good, but we're acting upon it or not acting upon it, and what effect that's having.
I mean, I'm not particularly worried about which way we do it. I just think a one-liner like that, maybe we ought to just have another think. Can I raise something else?
I will let you, but just on that one, I think we'll take an action for myself as chair to speak with Martin and the team about the best way we do that, and bring something back to the next meeting as an idea of what we might do. But yeah, you wanted to raise something else, so.
Yeah. I mean, it's just those things if something goes wrong, we'll get asked, well, what did you see? And we saw a one line saying it was okay. And it probably, it almost certainly will be okay, but I think we ought to be able to convince ourselves that it is. That's all. So don't worry about it. It's just a...
No, just to add to that, Councillor Pinnock, I think over the years, different chairs have steered us in different directions about the level of detail we provide where things are generally okay, and perhaps over time we've erred slightly on minimising that and focusing perhaps on other key areas where there are bigger problems, but perhaps we need to reflect that we've perhaps gone a little too far, and members might need a little more detail about things that are
It's a balancing act, isn't it? I don't want great long reports, but if we could see pick out one or two sometimes, just so we can see.
Yeah.
Then the other thing I want to raise is about the tenancy allocations. Because, I mean, as members, one of our, I suspect, well, certainly mine, complaints that I have from tenants is, how on earth did they, who we know have been accused of antisocial behaviour, how did they get a full tenancy? And now I know why. So that is an area I hope we can tighten up considerably, because as we've dropped the numbers of council properties that we have, which enable people to have a home with social rent, I'll tell you, when I first became a councillor, some years ago, I have to admit, we had 46,000 council houses. Now we've got 20,000. And that means there's huge pressure on the ability to have a home with social rent, either through the council or housing association. And if those who have previously accumulated arrears secured despite antisocial behaviour reports get a full tenancy, you just go, no. Anyway.
Thank you. Just on that, Simon, there was you've got one fundamental recommendation, but I'm not sure what that fundamental recommendation is. Are you able to just clarify that one point?
Not off the top of my head, I'm afraid. Right. I will let you know.
I think on this one, we'd like a report back. So perhaps either from yourselves and Martin, or from the team, because there are a number of concerns around this. And I think Councillor Pinnock has really, nailed that in terms of what the concern is. The other one for me, which really, given the financial state we're in and the lack of resources we have, when I read a report that says too many staff attending panels for management lets and decant applications, that kind of says to me that there probably are better things some of those staff could be doing. So if you would take away our concern and ask that the appropriate person comes to a subsequent meeting to talk to us about why we ended up with limited assurance and give us a bit more of an action plan around what those actions are that they're putting in place and the timescales for those actions. Because Councillor Pinnock's absolutely right. We all must experience that of how did that tenant get that tenancy when I know X, Y, Z about them. And I think it would help if we saw a little more detail around that. So thank you for raising that, Councillor Pinnock.
Just on a mechanistic note, Chair, under our methodology, any fundamental recommendation equals limited assurance. The one fundamental problem, the rest can be absolutely...
That's fine, Simon. I think we're clear what we want to do on this one.
Yeah.
It was Chris next, then Imran, and then James.
So firstly, absolutely think it's a really good idea to work with Martin and try and look again at how we report on all the activities, so that'd be helpful. Simon, thank you for putting the narrative in this report into some context. That's really helpful, particularly for someone like me who isn't a kind of born and bred local authority person, so trying to work out what direct payments is and how big it is and its importance is really useful, and perhaps in future that can feature in here. So two questions really. One on direct payments. What is it that we should be most worried about? What can go wrong given what you've described as the recommendations in key areas? Because I'm struggling to get clear whether there's financial loss, poor service. What is it that can go wrong?
Well, I suppose the safeguarding of the individual is the most important part that is at risk. But from a financial point of view, given that the way the system operates, we need to be ensured that a first assessment doesn't last forever if the individual's circumstances have deteriorated or improved, and that the financial and the care package and the financial assessment are synchronised and sit well together and reflect one another. If that doesn't happen, then potentially we're not paying enough, or we're paying too much to one individual, and there's a consistency angle between different children or adults as well.
So I think that sort of analysis would be really helpful in these reports to understand the significance, because describing the recommendations in 3 bullet points without telling us what the potential impact is lessens your impact. I think if you throw safeguarding in as a risk, it changes the committee's perception of the importance of the report quite substantially. It reads a bit of a kind of process issue rather than a real impact issue. So I think that's something to be picked up on. My second question was about fraud. I'm just trying to get my head around whether the incidence of fraud is increasing or the nature of fraud is changing. We get a kind of moment in time picture. It's hard to go back over all the reports and kind of get any sense of trend. So what is happening in these areas of fraud? Are they getting more frequent, worse, harder to detect?
Well, the report reflects what counter-fraud work we do, which isn't necessarily the same as what fraud or the pattern of fraud across the piece is. It simply reflects what arrangements the council has in place at the moment, or has had in the past. I think anecdotally the feeling is that in an adverse economic climate, the incidence of fraud is perceived to be a greater risk. I mentioned mandate fraud when I was talking about account. I think at one end of the spectrum, there's relatively low-level things like not declaring changes of circumstance for benefit type issues that were raised earlier, and at the other end, there's the sort of cybersecurity prospect of £1 million walking out the door before you know it. So the financial risk is much greater at that end, but obviously the impact on individuals might be the same because it's happening to you, sort of thing. So I think the incidence of referrals are increasing, but whether that's and will continue to, whether that continues to be the case as we raise awareness of the risk of fraud across the key parts of the council, you would perhaps expect that that would be the case. So whether there's more fraud or simply more referral of it is debatable, I think.
Okay. Imran?
Yeah, thank you for your comprehensive report. Obviously, I don't expect to have the specific significant recommendations to hand, but in regards to independent foster agencies, some colleagues, especially linked to various charities and support groups, have raised concerns about the increasing costs charged by some of these foster agencies to the public sector. And at a time where we're going through not only cost of living crisis, but also financial crisis throughout various local authorities, what are those recommendations? Could they be supplied at a later date? Because obviously I've got concerns about, I mean, obviously my personal viewpoint is that fostering, safeguarding, a lot of these services, care homes, should be brought within the state sector. That's my personal viewpoint. But I'm not making accusations about any specific fostering agency or any domiciliary care or special needs care or children's care private enterprise, but the figures I've heard per child per week have been staggeringly expensive. And I've spoken to landlords who rent out properties to various agencies, and for me, as you know, as someone not an expert in this, in the sector, it's difficult to justify the costs. So, in regards to, I'm sure you've done thorough research in the costings, and your objective is value for money. But could we get some information as to, are we being really robust into getting the best value of money for a struggling council?
Absolutely, Councillor. I mean, I think in terms of this particular audit, I suppose the first issue is having effective contract management, which includes the financial aspect. But generally, I think we have agreed with children's management that the value for money arrangements in the current framework contract that pertains to fostering is an area that they need to, with support from finance colleagues, need to look at much more fully than perhaps hitherto, to reflect the changes of circumstance in the marketplace that you've described. So I think that's we haven't, or the audit scope didn't include a full financial review. It was to bring out the fact that a full financial review is required and form part of the budget setting process.
James?
Just a few comments really on what was discussed and the sort of to take away, I guess, to have a further discussion with Martin around how we could improve it. So I was just going to say, in terms of the report itself, I think how you went through it gave us some of the more of the information we wanted. I think on a couple of those ones, the limited assurance ones, actually, just from what was in the report, it was quite a bit difficult to understand exactly what it was referring to. So I think we probably just need to look at that. I think a little bit more information there would have been useful, because anyone just reading the report wouldn't have fully grasped the specifics of it. Just coming back to the point that was made about, should we look at an audit report and things that I think there was you made a suggestion. I think there's two separate things to me. So I think if we look at an audit report that's been undertaken, I think the benefit of that is it can give us some assurance around the thoroughness of the audits that we do, what we look at, how we present them. Because thinking, for example, about Prevent, I remember when that was on the plan. We were discussing, or I asked the question, what does that mean? Does that mean we just audit, a Prevent policy and 3 people who've got Prevent manager in their title? Or does it mean we go across the council and look at all aspects of where anybody has any involvement in Prevent? So it would be good to see as an example of one of those that we do. And then I think the second point you were making around recommendations and actions is a different one, which is more around, okay, so we've done an audit, we've made recommendations and actions, do we then manage those appropriately? So are they actually delivered? If an action gets delayed, does someone have to actually take accountability for that and provide adequate rationale as to why that's happened, what the reasons are? So I think there are two separate things that we could potentially build into the committee's work.
I think on that second one, that district heating again there was a previous audit, there was a load of agreed actions, and then nobody had really followed through on those agreed actions, had they? So the issue was still there. So it's how do we get on top of that to ensure that where there are agreed recommendations, they are delivered, and that we get to know if there's any delays with any of that. So yeah, I think that's what we need to explore, isn't it?
Perhaps just worth noting for awareness that to get as far as being included in the quarterly report, the report's not only been finalised, but management have accepted the recommendations. So it's an ownership issue from our perspective on them. We make recommendations, but it's their role to, having accepted them, to put them into practice.
I think it's fine to say that that's now a management ownership, but who's checking that management have delivered it? And that's the bit that we need. That's the bit of the circle we need to.
Yeah, I think we have recognised that there is a need for us to follow that up in a fairly systematic way, particularly on the key recommendations. Maybe not all the merits attention type things, that this could be slightly better if you did this rather than that. But on the key things, that's our focus.
Sam wanted to come in.
I was just going to say, just to support that is part of the work in the report that Martin will be bringing back here, in terms of the governance of that and how you have oversight and assurance of that, and to keep on top of those recommendations. It is coming back to this committee.
Yeah, just on that, because I think what I'm trying to remember now, a few months ago, Martin and someone else from his team brought back the risk management process and guidance that we follow across the organisation. So absolutely, it's on the whole organisation to implement that. But as from an audit committee perspective, I think we've got a role to go, well, is that actually being delivered? So yeah, it's not saying that that's necessarily an audit responsibility to always be managing every action, because obviously it's not. But I think it's our responsibility to check, does our policies and processes actually implemented in the organisation effectively?
Are we comfortable with the public part of this report? And if so, will we move into the final session? We're going to do the agenda plan first. No, we're going to do the agenda plan first. As you're aware, we have asked for another meeting to be put in place in February, just because the number of items that we had hoped to be able to bring to this meeting are going to come to January. It just made January a bit unmanageable. So I think we have that in front of you today, and I'll take any comments or questions on that. But I don't think have we sorted the date yet?
It's the 21st of February.
Right, okay. It's 21st February. But any comments or questions? February.
31st. Yeah.
I do. No, everybody happy with the plan? Okay, I'll now move to the private session. So we'll just wait.